Whenever you're watching the news and you see numbers and alphabets like this on your screen, be sure say you wonder what those are. Boy, well, I got you. You read those numbers, no financial figures, and the alphabets, so you read stock ticker symbols. Stock ticker symbols, no, I represent companies, or more ton or more shares on the stock market. Sounds enough. Financial figures, no, represent the current value and also the current share price of that particular company stock. You may also see percentages along with down arrows and also up arrows. This is just to show either the year-over-year, month-over-month, or week-over-week growth and as a performance of the stock. I hope I didn't lose you. Charlie, what did happen? If you're new here, this is Seeker Savvy. Over here, we talk about any and everything finance related. I can't realize you're not your diaspora, but brain now you're well informed about the stock market investing. And you know, my father also said, make creative channel way, now you're educating you. So come aboard and let's learn and win together. On today's episode, you're going to dive into the world of the stock market, what it is and how you can invest. Please note, sir, whatever I say here is never financial advice. I am not a financial advisor. I am just a regular guy that is passionate about attaining financial freedom and also dumb enough to document it on YouTube. Please do your own research. With that out of the way, please make sure to watch the video to the end because I will be showing you the companies I invested $1,000 in and why. Please like and subscribe to the channel so more people can benefit from this information. The question on your mind, I believe, said, what is the stock market? So that's the stock market. The stock market, a huge marketplace. People can buy and sell ownership in companies. Your friend says stocks and I say shares. Think of it as maybe I will to a small piece of big companies, be to say Apple, Amazon, Tesla, and I say Costco. So what stock and I say shares you are purchasing a small part of that company with the hope that the value of the stock now will go up over time. After buying the company stock, you become what they call a shareholder. Basically, we are entitled to a slice of the company's profits as well as the decisions the company makes, depending on how many shares you own, of course. So, why do companies sell shares, you may ask? Well, companies own shares to raise money to grow their business because they might need funds to develop new products, expand into new markets, and as a payoff, by selling shares to investors, they can raise money without having to go to the bank to take loans. In return, so we investor, you get a chance to share in the company's future success. Typically, the company, perform the stock price also usually goes up. And as a shareholder, you can get profit by selling their shares at a higher price. So, how does the stock market work? Stocks are traded on exchanges like the New York Stock Exchange, and NASDAQ, the National Association of Securities Dealers Automated Quotations, ISI for the NASDAQ. SAR platforms, bring together buyers and sellers. Gone are the days where you have to get a stockbroker to assist you in the buying and selling of stocks. In today's digital age, most of this trading happens online through brokers. It is important to note, when you want to buy a stock, you place an order through the broker. The broker, in this case, which is the online platform, will match your order with someone who wants to sell their stock. Now, the price at which this transaction happens, is determined by supply and demand. All right, now let's talk about the types of stocks. There are two main types of stocks. You have a common stock and you have a preferred stock. The most important thing you need to know is that most investors go for common stocks because no voting rights in shareholder meetings and also a claim on profits through what we call dividends. I am going to do a separate video talking about dividend stocks, but basically, there are companies that pay you on either monthly or quarterly basis just by owning shares in their company. Preferred stocks, on the other hand, usually have higher dividends and priority over common stocks if the company goes bankrupt. But typically, they don't offer voting rights. And that's why I said most investors usually prefer common stocks. Choosing the right type of stock, it depends on your investment goals and how involved you want to be in the company's decision making. Okay, so before we start investing, I am going to share with you some simple steps to get you ready. Step 1 is to educate yourself. I will say we'll make it a point to understand the basics of investing, the type of stocks, and the risk involved. There are plenty of online resources, books, and courses that can help you build a solid foundation. A good tip is to invest in companies you believe in. When I say you shop at Costco a lot and you like how the company is growing day in, day out, instead of just being a consumer by shopping there all the time, try to own a piece of the actual company. And I said, if you really enjoy drinking Coca-Cola, instead of just buying the product and always consuming it, try buying some shares in the company. You can apply the same terminology in other sectors of your life. That includes healthcare, transportation, finance, technology, oil and gas, real estate, basically any industry you can think of. Step 2, to choose the right brokerage account. Look for an online broker that fits your needs. Consider factors which is fees, how easy it is to use, and then the kind of tools they offer. The online brokers I currently use right now are Fidelity, M1 Finance, Moon, and Webull. Webull was the very first platform I used when I started this journey. So for the purposes of this YouTube portfolio, I am going to stick with that, especially since I liquidated the securities in that account to pursue other endeavors. So this makes it perfect since I'm starting on a fresh canvas. If you're in the US or Canada, I believe that Webull and some other brokerages I mentioned are available to you. If you want to use the same account to go on this journey with me, I have a link in the description down below to sign up. If you're located anywhere else, I'm talking Europe or Africa, there's definitely brokerages and banks out there that offer these services. Just do your own research and you will be good. Step 3, to start small and diversify. And you're wise to start with an amount that you're comfortable with. Making sure, best spread the investments across different sectors to minimize your risk. The rule of thumb most people go by 50, 30, 20 rule. Personally, I actually look at it as the 20, 50, 30 rule. And that's basically means that whatever your income is at the end of the month, before anything else, put 20% towards your savings and investments. This portion could cover things like your emergency savings, paying off debt, and investments. And then, depending on how you are living, 50% of your income should go towards your needs. So we're talking about essentials, which is your rent or food and utilities. Again, this could be less depending on how you're living. You could be living frugally, and that just allows you more funds to put towards investing. And, if you don't have a high rent or mortgage in general, and you're living with a roommate, this means that you typically are saving more and you can put more towards your investments. And then you can apply the 30% now to your wants. This includes discretionary spending, which is dining out, entertainment, let's go watch a movie, and as a charity, sending money to Ghana and all that. Obviously, it's our format way, it's not for everybody. So take what you can from it and tweak it accordingly. Some practical considerations to make before Selber starts investing in the stock market, to establish an emergency fund. Before Selber starts investing, making sure we save to her cover 3 to 6 months of our living expenses. The benefits of doing this, and I said the stock markets will not always be up. There are highs and lows. There will be a time the market could be down due to several reasons. You having 3 to 6 months of your living expenses helps you whenever something drastic happens in your life and you need quick money to solve whatever the problem is. You will not be pressured to sell your stocks at the time when the market is down. Another consideration, debt management. And this basically means credit card debt or personal loans we check interest rates now. Usually the one with the highest in interest rates, try to pay that one off first. So in your simulation way, you're going to say you have a credit card balance of 6,500 and an interest rate of 18%. The monthly payments, say you're making the minimum monthly payment of 163. You will pay off that debt by August of 2029. And then the total interest you would have paid, $3,481.48. So for spending $6,500, you end up paying $9,981.40. Something to think about. Another consideration, and they say you were going to contribute to your employer retirement plans. So contributing to your 401k, and it's a similar employer plan, especially when there's an employer match. That's basically free money. So do that before you even start investing in the stock market. Number 4, to stay informed and invest regularly. Try to keep up with market news, company reports, and the economic trends. Try to set up a schedule for regular investments like monthly contributions. This helps you build your portfolio over time. For example, on the 10th of every month, I have an amount of money going into certain stocks, no matter what the market is doing. Investing in the stock markets can be a powerful way to build wealth over time. Start small, keep learning, and don't be afraid to seek professional advice. Now, let's dive into the companies I invested $1,000 in. We're going to start by depositing the amount into the account. Once the funds are settled, we can then go into my watch list for this YouTube portfolio. As you can see, I have on my watch list 4 different stocks. These are VOO, SCHD, XLE, and O Realty. So my $1,000 allocation strategy for these stocks as follows. The first one on the list, VOO, which stands for the Vanguard S&P 500 ETF. VOO, exchange traded fund ETF, aiming to replicate the performance of the S&P 500 index. So you can say S&P 500 index. The S&P 500 index no, includes 500 of the largest publicly traded companies in the US, which covers diverse sectors, which is technology, healthcare, finance, and consumer goods. By investing in VOO, I am automatically investing in all these companies that fall within the 500 companies within the VOO stock. The reason why I invest in VOO, family, broad market exposure. So like I was saying before, investing in VOO gives me ownership in a wide array of companies, which effectively spreads out my risk. Instead of saying investing in just one single company, I'm investing in a basket that has a lot of stocks in it. It also has a proven track record. The S&P 500 historically has provided solid long-term returns. VOO a very low expense ratio, meaning more of your money will be working for you rather than going towards management fees. Second on my list, SCHD, which stands for the Schwab US Dividend Equity ETF. SCHD, ETF, it focuses on high quality US companies that have a history of paying dividends. And selected companies are more the strong fundamentals, consistent dividend payments, and a growth potential. Third on my list, XLE, Energy Select Sector Fund. XLE, an ETF, I invested specifically in the energy sector. It provided me with a focused exposure to companies that are involved in the production, exploration, and distribution of energy, including major oil and gas companies, which is ExxonMobil and Chevron. Last stock on my list, O Realty Income Corporation. A real estate investment trust, REIT. It focuses on owning and managing commercial properties like retail stores and office buildings. Also known as the monthly dividend company because it pays dividends to investors on a monthly basis. So it's like receiving a paycheck from that company every month if you're invested in them. Together, these four investments create a balanced portfolio and providing me with diversification. So basically spreading investments across different sectors and asset types. In terms of risk management, each individual investment has its own risk profile, but to combining in Boma and managing overall risk until your cushion against any volatility in a single area. I hope you learned a lot from this video. Always remember to do your own research and don't follow some guy blindly on YouTube. To support the channel, please like, share, and subscribe. And if you have any topics or concepts you want me to cover, please leave a comment down below. Medase, that's a ne, yebishia.